I'm Mona Corey, owner of Tucson Tax Team and an enrolled agent, licensed by the federal government and an expert in taxation. I also own real property in Rocky Point, Mexico, and I have firsthand knowledge on both the U.S. and Mexico tax requirements. I've made a series of videos about this topic, and I hope you enjoy them. In the United States, it's a lose-lose selling your Mexican vacation home. If you lose money on the property, it's a personal loss and it's not deductible. If you make money on your vacation home, though, Uncle Sam wants their share of the taxes. And it's usually capital gains, and most people own these properties more than a year, so we usually see long-term capital gains. If you've rented your home, you do want to make sure you'll have to recapture depreciation, and it is possible that you might have some suspended passive losses that you'll be able to use when you sell. So when you're calculating your gain, deciding if you should sell or not, make sure you take those items into account. You're going to have those U.S. taxes that you have to deal with for capital gains, but the more important thing that you really need to think about are the Mexican capital gains. And I know I've talked to so many owners who said, "What do you mean Mexican capital gains?" Well, you're in Mexico, and one of the biggest things we have to take into account when we're doing capital gain planning for Mexico is the peso devaluation. Since 2004, the peso has devalued by 58%. So you might actually have lost money in US dollars, but have a taxable gain to Mexico because of the peso devaluation. In the U.S., you take whatever you paid for your property, any improvements that you've added, if you have depreciation that you have to subtract, that's your basis. But in Mexico, they really don't care what you paid for the property. All they care about is what's listed on the official document receipts. So mostly that's usually your fideicomiso. So if you have a lower price stated on your fideicomiso than what you paid for it, the Mexican government doesn't care. That's what they're going to calculate your taxable gain on. So it is important when you buy an existing bank trust that you're aware of that, and you get documentation that the previous owner has paid their capital gain taxes. Otherwise, you could be stuck for those. So I have an example about the peso devaluation. Let's say you purchased your home in 2007 for $100,000 US. That means that you would have purchased it for 1.1 million pesos. And if you sell the home in 2015 for $100,000, now the peso's 17 to 1. So you actually sell that property for 1.7 million pesos and gives you a 600,000 peso gain. And that calculates into $12,352 of capital gain tax rate for 35% in Mexico. This is a huge issue that you need to be aware of before you list your property. If you happen to actually have a gain in both the U.S. and Mexico, you can qualify for tax credits. The U.S. will give you a tax credit for the tax you pay into Mexico, up to and limited to what you pay in the United States on that same sale. The other thing to know about is like-kind exchanges. You are able to like-kind exchange foreign property for other foreign property, but you're not able to go back into the United States. So you can't go from U.S. to foreign or foreign to U.S. It has to either be U.S. property to U.S. property or foreign property to foreign property. We also don't usually see like-kind exchanges because it does have to be business class property also, and most vacation property in Mexico is considered personal use.